Greetings, and thanks for joining us once again. This is Greg for Teslafaninsight. Today's discussion we focus on is charting says Tesla to 236, and instead of the chart driving up to that, we kind of got the opposite. The stock price first fell, and then we ended up in the 212 region by the end of the week. So today's show's goal is to look at those of you who are doing charting and leveraging that charting to improve the quality of your investing, as well as to look at an alternative to that in terms of sort of what next space is what I would call it. So first, thanks again for joining us. This is Greg for Teslafaninsight. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like some ideas on investing and trading, please join us on Patreon, and it definitely is a help and support to the channel. I'm having fun, as you can see, with the camera. We usually don't do portrait; we usually do landscape, and for some reason, it refuses to allow me to do it. And instead of continuing to mess with it and slowing down delivery of shows, note we are working on it and we'll get it figured out. So today, I have a friend of the show. I don't want to say his name, but he can just send me a note or something, because great guy. He does a lot of work in charting, and I want to discuss charting, but I don't want to expose him if he doesn't want to be. So what happened was, I guess middle of last year, late part of last year, I used to get like daily update charts from him of things to think about. There are a lot of chart concepts of candles and other things that were being done. And he sort of felt like he really had a fairly good grasp of what was going on with the stock. So what basically he said to me is, at the beginning of the week, he sent me a text and said, look, I looked at the charts. Tesla is going to end up at about 236 and sort of mellow out there. It started off the week in the 223 pre-market and sort of started, leaking ever since. And as you know, we got a downgrade from one of the big analysts, and the stock dropped below 210. And then after that came up, we kind of went 3 days, and the stock started rising again. It never got to 236. So is his charting bad? He works really hard at it. I think he's a good chartist. Well, the question then is what happened to the chart performing like he expected? The answer is, you could say, I don't know what happened, but I think I know what happened. So when you go and read, if you go online and start watching some of the chart, teach you how to chart, teach you how to trade stuff, a lot of people tend to talk about having really good ideas that will help you make large amounts of money. All you have to do is learn the system. Well, one of the shows I covered a while ago was the fact that several years ago, like 4 or 5 years ago, day trading was the bomb. It was awesome. It was, a lot of people were making money. It was booming. And then all of a sudden, did you notice how day trading went away? That's because people stopped making money. My argument is, what's going on here is, in the old days, you used to trade against other traders. Now you're trading against a bot. And what's the difference between the two? Well, I believe, and it's obvious, the difference between trading against bots and trading against human beings is that human beings kind of have we develop a concept, see if it works, and then ride it for as long as you can while you're making money. Kind of totally makes sense. The problem with bots is they do the same thing, but they kind of do the opposite. What do I mean by that? Well, it turns out that the strongest bots are attached to the most intense computer systems. And what these guys do is they study people and their concepts. And once they understand the pattern of what people are doing, that's when they get in and kill them off by taking sort of the counter seat to what they're doing. So you'll notice that when it comes to investing, trading, particularly trading in the short term, you'll notice that I have a theory I call the FU theory of trading, which is all you have to do is go over to the option string, look at the list of options, let's say on this case in Tesla. And what you want to do is kind of, just start at the beginning of this week and look at the fact that, and then look at what happened by the end of the week. What you'll notice is that if the overall bias is positive, all of a sudden, guess what? Some weird reason the stock starts falling. Who knows why? How about the fact that the analyst gave it a downgrade? Unknown. The other side of this is think about last week. Did you notice how the stock fell to 195-ish? And then all of a sudden it did this massive rush back to the 220s. And yeah, I think there was a little bit of an analyst change there. But I kind of want to bring this up to you because you can kind of watch the options board, and then all you have to do is say, hey, where's the heaviest load of people? So if everybody knows Tesla's going to drop below 200 and head for 150, you can see it in the buying patterns of the options. Guess what? There are some people with a lot of money who can run the opposite of what all those people are doing. So I believe, and I'm looking forward to your comments on this, that charting has to be the worst. And the reason it's the worst is that anything that's predictable, that happens regularly, it gives an opportunity for them to sick their giant CPUs or computers after you or those people. And so, typically, so bottom line is, if you got a good idea, and especially if it's confirmed in charts, start watching the charts and notice how there's a way in which the marketplace moves to kill the charts. So let's go back to my situation for this week where I call my friend Bob. Bob sends me the text. He said, the charts, I'm confident in this. Charts say Tesla 236. It's going to happen, ba-da-da. What ended up happening? Stock fell to 205. And it's just gotten this week back to, like I said, 212-ish the last time I checked on Friday. And so this brings up the question was like, is he a bad chartist? No, he isn't. What I think happened there is that the powers that be decided that, hey, great opportunity to wipe out a whole bunch of people and their options. A caveat I want to add to this, I actually have a good trading buddy that I talk with often, and one of the things he shared with me I thought was really interesting is that there's a company that he made some good money off of because there's a paid trader who sort of ran through an excellent situation where the guy put up something like 20 or 30K. He made about $150,000 in one day, and he got out, but had he stayed in the trade, he would have pushed out about a $500,000 gain in one day. So I'm kind of ending formally my discussion of Tesla and chart trading and just saying, I think it's a good idea to chart. You have to work hard at it to get good at it, but do not be surprised if the charting you've done ends up being a recipe for disaster in the short term, because the chartists are under attack by well-programmed bots to anticipate the charts and then watch how the trading is reacting to the charts and then hammering all the people that are doing the chart process. So go for the charts. If you think it's going to work, go for it. I think it's a really bad idea because you can work really hard and end up with a sniper called giant computers that want to take your head off after you've done all that work to figure out what's going on. Can you get it done in the short term? Maybe, but the machines are just getting too fast and able to anticipate what you're doing and going to do and then bludgeon you. A la, you just saw what happened with Tesla this week. So as I move off to this other situation, I'll call my friend John. John and I were talking about what happened last week, and this guy actually went from like a 30K to 150K in one day. And the way he did it was by trading on a Friday. What's the big deal on a Friday, particularly the third Friday of the month? It's options expiration every Friday. And so he's sort of dancing on the grave, put up a lot of money, but there are a number of detail points that led to why he did this. The first point was the Fed didn't raise rates. The second thing that he was looking for and predicted it was the 150,000 as the number for job claims for the past week. Well, the number of jobs created was significantly down, like 100 grand down, and people are losing work. So not only is the Fed supported by, so the logic of the Fed is being supported by a number of detail points. In this case, the key detail points the Fed is happy with is that people are losing their jobs and the number of jobs being created is kind of low. So that's gravy, party time for the Fed, hence why there are certain movements that he anticipated and they happened and it moved the market nicely and the profit was excellent. So, well, excellent question you were going to ask is, wait a second, I thought you said charts didn't work. Well, think about what happened in that circumstance. This gentleman connected several pieces of data in the short term. The challenge is that if you look out, you can get as much, just gazillions of amounts of data out there. What separates the great traders from the not so great is that at the right time, you're emphasizing a small set of data points that are driving what you're choosing to do. So part of the reason he made all that money was if you're trading in the final expiration day, any money put up, yes, you can make a killing. You can also get killed very easily as well because there's no time value there for you to work with. And I would argue that, well, what you should come back and say to me is, well, Greg, I thought you just told us, the whole charting thing is screwed. Well, he wasn't charting. What he was trading on is information. So he had a process, and his process, he was willing to put money up against it. I think he had something like 100 contracts or something like that, and those contracts moved nicely in his favor when the market embraced the fact that the Fed's logic of not having to raise rates was solid. So if he's doing a 2, 3, 4 hour, the bots can definitely track that down, no problem, in order to blow up that trade. But the issue, though, is that when you hit him with stuff that's not obvious, and then a bunch of people in this section of the market starts to make money, the bots can get after them to try to wipe out the trade. But they have a problem too, which is, wait a second, a bot can dominate and control the market more easily if it has time to do it. So give me a day or two and I can blow you out as a bot. When you're in a situation where I've only got 20 minutes, a half hour, an hour, 45 minutes to blow you out as a trader using the resources of the firm that I'm with and the movement of the market, yeah, the bots can get you, but it's a lot more difficult to do so and destroy your trade. Hence why that's one of the exceptions to the bot destruction department is just the fact that in short windows, people who are well organized can win. It's just that those windows will open, you got to make your money and get out, because in this case, expiration simply ends the trade because you can't do anything if expiration hits you. So I'm bringing all this up because part part of the goal of this show is help people make money, identify money-making ideas, and executing them. So will Tesla go 236 based on what the chart said sometime in the next week or two? It's entirely possible. The way he was talking about it on Monday was that we're about to see a pop up to 236 and then everything mellow out. So not only did the pop up not happen, but the stock went from 220-ish to 205. It went south. Now, if I were to put out any energy on that, I'd have to look at it and say, hey, not worth your energy. Why? Because almost the minute he called me and said, the chart said 236, instead of saying, yeah, buy anticipatory of the 236, my response should have been, buy puts, because it's going to 205. Why? Because the bots can see all of that trading action driven by the charts that are anticipating this nice upward move. So the cleanest move is to crush all of those people. And that's what they did this week. And that's why I chose to do this show, because we want you to understand better what's going on and make money in the process, especially as you invest and trade in Tesla. Just a final note here I wanted to point out. Each week I try to get into a little bit of discussion for those of you who have large portfolios that you're managing. And this is just a reminder. I probably should do a dedicated show to it, but if you go back over the last week, note there's this phenomenon of hedged up in the 250, 260, i.e. bought puts, perhaps 5% of your portfolio, maybe even 10, you'd have made a huge amount of money and almost covered all the losses in value of the stock in the process. And so as we get into major news times, for example, when Cybertruck's going to hit, it might be a good idea to consider some hedging, because those of you who are large holders win either way. Either A, the stock falls and you clean up, you make money on the hedging puts that you bought, or B, the stock rises, your puts become less or non-valuable, but you make money on the ownership of the stock side. So you win either way. So something to consider out. Again, drop us a note if you'd have any questions on this. Happy to respond. Any rate, once again, thanks for joining us. This ends our investing trading side of the house. Just a reminder on the health tips. I have to say that this week I wanted to add in some basic yoga moves. So if you're on all fours and then you're making an effort to gain flexibility by some basic yoga moves, like getting on your knees, then sitting back on your feet, and then in a circular motion left and then circular motion right, you're sort of moving your upper torso as a way to increase stretching and flexibility there. I think you'll find it very useful. At any rate, once again, thanks for joining us. This is Greg for Teslafaninsight. Tschüss, au revoir, le hitro, hoda hafez, sadajuche, ni hao ma, konbanwa, namaste. And in Jamaica, we say, enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.